Welcome, everybody. Craig, glad to have you. Glad to have you join us. We're getting started with our breaking news, and by breaking we mean within the last day or so. Certainly, some of the articles that we're reading, they're certainly not dated, but we've got some great things to talk about today. First of all, in the news, straight from American Banker, Wells Fargo. Based on its current trajectory from the end of the last two quarters of 2021, Wells Fargo is expecting increased loan growth, auto loans, mortgages, student loan backings, etc. So there is and now it may not be double-digit growth, but it is more significant than 2022. 2021. So what does that mean? Well, if you've seen any of my recent web classes, if you've been to my recent boot camps, the bottom line for all of us is that this is I've been predicting this for a while. Growth as for fundable borrowers, we are the bullseye borrowers of the country, and they're going to give us higher. They're going to qualify. So if you do a pre-qual on a house, and we have a spectacular profile, we got amazing borrower behaviors, they're going to qualify us for larger purchases because we can qualify for lower payments. So auto loans, same thing. Even in the strange and weird dynamic of student loans, they are these lower rates are going to impact and higher fundability is going to impact positively those of us who are fundable. For those who are not fundable, those are the outer rings of the funding target, right? They're looking to approve more loans just for lower amounts and higher interest rates and fees. So if you're part of the tribe, then make sure that you're doing everything you can to stay fundable, because Wells Fargo is one of the bellwether top 4 tier 1 banks, and what they do, you can count on the others at least experimenting with some of those same new policies. Now, we've been talking about everybody getting connected to the banking program. So here, this one's great. Again, from American Banker, Ford has enlisted Stripe. Ford has done a strategic alliance with Stripe. Stripe is a merchant processor, to take credit cards and payments. Ford has done a deal with Stripe where they are going to, on the dashboard of the Stripe account, Ford is going to allow their borrowers to pay their auto payments right from the Stripe dashboard. Now, what does this mean? Yay! But what does this mean? It means the integration of corporations that are selling products and services. We've seen this over Venmo and Amazon did a deal so that Venmo becomes one of the payment options when you go to checkout on Amazon, right? And they're trying to get it to become the preferred rate because there's lower costs for Amazon than traditional payment processors, right? So everybody who's selling something or something big, or these big shopping networks or these platforms like Amazon or PayPal, etc., they're all syncing up with payment processing mechanisms to make it more transparent and read easy for borrowers to make payments. Now, they didn't say anything about buying a car via Stripe, right? But they are putting the payment. They're allowing the Ford Motor Credit, those types of things that are financed in-house by the Ford. You buy a Ford car, use Ford Motor Credit. They want you to be able to pay on the Stripe platform that auto payment. So that's also a big deal, because it's showing that the everything that we've counted on for decades, where you use your Visa, MasterCard, American Express, and Discover were the only payment processors, right? 10 plus years ago, Venmo came in, PayPal came in, and they stayed kind of on the periphery. They stayed out in the outer banks of the payment processing, and they were more payment transfer, right? Take some money from my checking account, pay my hairstylist or otherwise, but that is radically changing. So who's been beleaguered? The people who are getting their asses handed to them is Visa, MasterCard, American Express, and Discover payment processing platforms. Everybody is now making inroads to those payment processing platforms. And it is good news is if we can handle the confusion, because some of us are going to look at why is Venmo on my why is Venmo on Amazon? It's not a credit card. See what I'm saying? The if we can handle the confusion of these new players in the payment processing platforms, then it's going to mean lower costs for all of us, because now everybody's going to tighten their business models to offer the lowest cost processing. And then these big Titan platforms, PayPal, eBay and Amazon and all the big sales platforms, including Ford in these cases, et cetera, everybody's going to be able to pick and choose their best, least cost, most transparent, best option for payment processing. So payment processing is the thing. Now, we don't have any things any updates on it, but remember, the last few weeks, every week we've been updated on buy now, pay later, right? And that BNPL, buy now, pay later, is going everywhere. So it really is open season on payment processing, including the buy now, pay later, which is more expensive than regular payment processing for the merchants, because the merchants are the ones who pay the fees, but everybody gets paid sooner. The buy now, pay later vendors, the banks who are using it, Wells Fargo gets paid in 4 payments rather than the risk of going out, whatever, minimum payments, 36 years at 22% interest on a $10,000 card, paying the minimum payment. I believe if my recollection is correct, was like 23 years. So that is a long-term risk model. Buy now, pay later, 4 payments. It's more money. So somebody who needs to avoid the charges, but it is interest-free. So look at that dynamic again. It's interest-free to the buyer, to the consumers, to the borrower. It costs more to the merchant, but it's less long-term risk for the bank carrying the paper. So whole lot of stuff going on, guys. Whole lot of stuff. Now, I saved this one for last because for some of our clients, one of their favorite, some of our tribes people, this is kind of good news. Kind of good news. I'm not a partaker myself, but the cannabis banking is booming at the local and state level. It's everybody's doing it. The feds, none of the big banks, anybody who crosses a state line, you guys listen carefully. Anybody who crosses a straight line avoids like the plague lending to cannabis businesses, growers, distributors, retailers. They don't want anything to do with it, because if it is international, or it's interstate fraud, interstate wire transfers. If you exchange money across state lines, and banks who carry paper, if somebody is driving and they're in Indiana and they want to pay in Ohio, they make a payment for something that they're doing in Indiana that is legal in Indiana, but it's illegal in Ohio. Boom. They just broke federal law, because cannabis has not been decriminalized, or nor is it legal federally. It is in many, many states. So who's picking up the slack? While the tier 1 and tier 2 banks are saying, hey, we're never going to, we can't do this until it's legal nationally, and it covers every state in our footprint. states and local banks, community banks, are picking up the slack. So I've got a couple clients who are in the business, and this is actually this helps us optimize for local banking, tier 3 banking, instead of the tier 1s and tier 2s that are normally our end game. So that is awesome as well. If you're in the business, that's been a precarious funding model for a minute, but for us, we're pivoting to address tier 3 banks in order to help our clients who are in this business be able to create the funding or hit the funding goals that they're after. Whew, I think that is it for me today. So like, love, share. If this is ringing true to you, if you're loving what we're covering, then like, love, share. And for those of you who are part of the Funding Hackers community, then let's head to our insiders Funding Hackers meeting, our Q&A, so that let's cover some of these. I know some of you in Funding Hackers are part of this group where it's a big hell yeah for cannabis, local cannabis funding. So we will see you guys on the inside.